Hey there everybody, what's going on? Welcome to my channel. Today we're going to be breaking down some of the major news from the Indian stock markets. Past week we have seen both the Sensex and the Nifty that have just had their worst monthly performance since the COVID-19 market crash back in 2020. So we're going to be analyzing what's going on and why is it happening. And although the market might have recovered a bit so far in this week, but the market's still in a bit of a downturn as of now. So we're going to be analyzing why is it happening and what you as an investor can do to stay smart in this volatile environment. So what exactly has happened? Throughout this month of October in 2024, the FIIs have committed strong selling in the Indian markets. We have concerns why are they pulling their money out. In this month itself, they have pulled out $10 billion from the Indian markets, which have made it the worst ever FII selling since the COVID-19 crash. And so there are basically three major reasons why this sudden fall in the market has been happening. And firstly, the strong FII selling. Okay, so this has been to somewhat be attributed as the China backup. As China's playing in, they are actually beginning to see a sudden form of economic growth. So that might be effective in making this crash happen. Alright, next up, weak corporate earnings of several large cap Indian firms might be a very important cause behind this fall, because the market relies on majorly its strongest of firms for its economic growth. So that's a very critical point to analyze. And thirdly, we can say there's a global uncertainty and there's war going on between Iran and Israel, and so that there are geopolitical issues that can be considered as a factor behind the sudden fall in the Indian markets as well. The investor sentiment is very crucial to understand where the economic viewpoint stands. With all these factors that we have just discussed and these being into play, investor sentiment has taken a big hit. Many retail investors are now feeling nervous, wondering if they should pull out of the markets or hold on. The outflow from the foreign institutional investors has only increased this anxiety. But panic selling could be dangerous. In this kind of situations, you need to be patient, and I think investor needs to feel patient rather than being affected by these sudden moves and sudden panic in the markets. Now let's just talk about what should investors do and what should they be thinking as a part of this substantial course of action. They should firstly focus on fundamentals. So look for companies with strong balance sheets and good growth prospects. And nextly, you should diversify your portfolio and spread your investments across different sectors and asset classes. It reduces your risk in case one sector fails heavily. And it's always a better and wiser decision to consult a financial advisor. They always know better than you can hope for. So I think it would be fundamental in these situations. Alright, let's just end this on a conclusive note, and I'm going to be sharing with you my advice towards these situations and scenarios like this. I think in tough times like this, it's important to stay informed, stay calm and stick to your long-term strategy. The market might be down now, but history shows us that recovery is often just around the corner. So that's all for today. That's all I wanted to say. Hope you have found this video helpful, and if you did, please don't forget to like, subscribe, and do put your valuable comments down below and let us know your thoughts about the situation. Thank you so very much.